Hello everyone, thanks for joining us today and welcome to this presentation of 2 simple steps to maximize your profits. Now in today's webinar, I'm going to share with you 2 great techniques for adding to your current trading plan that can really increase your odds for consistency. As we look at this example right here, I'll show you how you could have looked at this chart in BDX, and as you see here, just by simply looking at this setup, you would have been able to have a buy situation occur right here and taken advantage of anywhere from 1 to 20 points in the next 2 months. So I'm going to share with you how to find those 2 simple steps, hopefully to increase your odds for success in trading virtually any market in any direction. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. If you haven't attended our webinars before, we are first and foremost an educational company. Our sole purpose is simply to educate traders, because it's our belief that the reason why most traders fail, and it's been estimated upwards of 80%, is because you're basically taking your decision-making process from someone or something else. In other words, look at your own trading. How many times do you decide whether to buy a stock or to go long a future or a currency pair by simply going to a signal service or seeing what someone says on TV or going to a chat room or a trading room? Basically, this is the way I would say 99% of most traders trade, by taking someone else or something else's advice, and this is why most traders fail. They're not listening to the most important thing, which is the market. The trouble is that most of us weren't taught how to listen to what the market wants to tell us. So that's what we do at Specialist Trading. I know this from firsthand example because I really struggled my first year or two trading. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. I was a specialist or market maker in roughly about 50 stocks for roughly 9 years. I traded through the crash of 1987 and the bull market that followed, but I still struggled my first couple of years, and I was lucky enough to come in contact with a couple of mentors that were able to turn my trading around. And they basically taught me how to listen to the markets. So this is what I do with all of my students, teach them the same things that I've been applying in my own trading for the last nearly 4 decades. And I believe this is what has sustained me. So as you see, my goal is not simply to force feed you signals, force feed you strategies, and tell you how to trade, what the perfect time frame is, what the perfect market is, the way so many other websites do. We really don't believe in that. We're just an educational company. We want to teach you how to trade with the specialist edge. So hopefully you'll be able to trade for 10, 20, 30, 40 years down the road as well. Okay, so that's a little philosophy about what we do. Now, once again, I have a great educational presentation for you today where you can actually start applying these 2 techniques I'm going to be sharing with you as early as today, as early as once we conclude the presentation. But we are required to show you this first, so please take a moment to view our disclaimer. I'm going to show you tons of performance results. I have a lot of slides to share with you about today's 2 steps for maximizing your profits. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer before we begin this week's presentation. And if you haven't done so already, I would like to take this time to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there. It's abbreviation for Specialist Trading at SPCLST. TRADG. Each and every day I post little tidbits of information, anywhere from daily financial wisdom to actual signals that our strategies have generated. Once again, these strategies are simply basic formats for you to take and to apply to your own trading. You can adjust them, alter them, edit them, and we teach you how to do this in our courses so that you're not just basically trading the system. Anyway, this is all posted on our Twitter account from daily basis for your educational means, and there's a lot of great information, so feel free to follow us on Twitter. Now, one thing I'd like to say, since this is an educational presentation, we want to keep it like a classroom, so if you have any questions, kindly wait till the very end of today's webinar to ask. I have a lot, as I said, I have a ton of slides to share with you today, so you'll be able to fully understand these 2 steps. And I want you to start using them as soon as possible. But because there's so much information I want to share with you today, I don't want to slow down with questions every couple of slides. And oftentimes, if you wait for the next slide, your question will be answered. So if you could kindly hold off to the very end of today's presentation to ask any questions. And I promise I'll get to each and every one of them. And then if we happen to come up with a question after we've concluded, you'll have an email address where you can contact us and ask any questions you like, okay? So once again, questions at the very end of the presentation. So why don't we begin? Let's start out with sharing with you step number 1. First of all, let me just say that these steps are extremely simple. So that's the beauty of everything we teach. It's based in simplicity. And I know a lot of people say, well, boy, if stuff is that simple, it can't work. And I know we've all been taught that the more complicated something is, the more things you pile onto your trading plan, the more valid it will be. But it's been my experience that it's actually the opposite. In 40 years roughly of trading, I have found that the simpler things are the things that work the best. So you're going to see that these 2 steps are extremely simple, but I'm showing you how powerful they can be. So step 1 is simply, if you get a buy signal in any strategy, in any market, it can only be entered above the 50-period moving average. Okay, so you have to be entering above the 50-period moving average. You cannot buy below the 50. It's just the odds are not in your favor over time if you do that. Now, conversely, sell signals can only be entered below the 50-period moving average. All right, you will not ever go short if you are above the 50. Over time, you will see how this simple process will really help to increase your odds for success. Let me show you how this can be applied to your trading. Here's an example, a chart example in ATVI. Okay, as we look at this, we see that, well, the stock is basically going sideways. But the first thing we ask ourselves is, where is price in relation to the 50-period moving average? And obviously, it's above. So we only want to take a signal if it's a buy signal. I don't care if someone says in a chat room or some guy says on TV to go short this stock. Don't do it, because the odds are that it's going to continue to go higher, as we see right here. Okay. Now, conversely, as we look at this stock, KSS, this older chart, someone could say, well, this looks like a good buy, Steve. We've made like a bottom here. It looks like we've got some support. And actually, I like to follow the institutions. That's the way I trade. And a lot of them are buying and touting this stock. So I would really love to buy this. Well, I'm not going to tell you you're wrong, but I wouldn't buy it until you get verification that it's trading above its 50-period moving average. Because once again, the odds are in your favor. If price is below the 50, the stock will go lower. Okay, I know a lot of you are saying, well, Steve, that's all well and good, but that's just too simple. I mean, it's too easy. And I'm not going to promise you that this works 100% of the time. But remember, we're not trying to be like another website and say we have the perfect technique that's going to work, 100% of the time and give you tons and tons of gains. We're just trying to put the odds in your favor, because this is why most traders fail. All right. In fact, let me show you what happened 29 years ago today. All right, show you that this is not something that just works in the last couple of weeks or last month. I was applying this 29 years ago today, and I'm going to show you how this actually helped me save tons of money, because 29 years ago today was something that, if you recall, it was called the crash of 1987. As we look at this chart in the industrial average, okay, this was October. This was a couple of weeks before that. Now, by using this simple technique, I knew as early as right here that I was only going to be short the market, that I wasn't going to be buying anything. Even though a lot of people were saying, well, this sell-off is overdue, it's just a pullback, we're going much higher. Because if you recall, if you were trading back then, the markets were really making highs all the time. And this was simply just the first sell-off we had ever experienced in a long time. But this simple tool told me that I shouldn't be buying anything. I was lucky enough that my mentors had taught me this in advance, because at this point right here, we had already had 3 consecutive closes below the 50-period moving average. And we haven't had that in a long time in 1987. Now, all you need is roughly 3 to 5 days below, or 3 to 5 bars below, because this can be applied on a 10-minute chart, a tick chart, it doesn't matter, to tell you what side to be on. But remember, it's not a strategy. It's not a system. It doesn't tell you to simply sell at the market if you have 3 closes below or 3 closes above to buy at the market. This is just telling you what side of the market to be on. So in October of 1987, 29 years ago, I knew that since we had 3 closing days below the 50, that I wasn't going to be buying anything. And that saved me so much money, because 2 weeks later, well, we all know what happened. Now, on that day, which was 29 years ago today, the market fell 22%, or 508 points. Now, remember, 508 points isn't a lot by standards these days, but if you transfer that over into what happened 29 years ago, and you transfer that over to relatively what it would mean today to be down 22%, that would be down about 4,000 points in one day. All right. Now, I don't think you'd all laugh at that or think that that was inconsequential. If we were down 4,000 points in one day, that would be major news. So I knew 2 weeks in advance that I should only be looking at the market from the sell side. Now, I know a lot of you may be saying, well, Steve, that's all well and good, but I'm a day trader. I don't look at daily bars or weekly bars. I only look at 5-minute bars, tick charts. Okay, well, let's go back a little bit further. Let's look at this 5-minute chart of the E-mini S&P. Now, just judging off what I've taught you, would you be a buyer this day or would you be a seller? Remember, it doesn't matter if we're looking at a 5-minute chart. It doesn't matter, what time frame. It's a monthly chart. All that matters is where is price in relation to the 50-period moving average. All right, so now looking at this and what I've taught you in this presentation so far, you would obviously say, well, price is below, so I should be a seller this day. Well, that would have been good news because this was the flash crash of 2010, roughly 6 years ago. This is where the market fell down nearly 1,000 points intraday at one point. A lot of people love to complain and love to say, boy, there's no way a little guy like me can make money against these big programs here and all these high frequency traders because, I just have a small $5,000, $10,000 account and there's no way I could survive. That's silly, all right? I tell my students the very first thing you have to, leave at the door is your victim attitude, all right? Everyone has the same amount of hours in the day. Everyone should be able to learn these same techniques. This is what we teach you. This is what has sustained me for nearly 40 years. So you never have to play the blame game if you learn to listen to the market. The only traders who lost money this day were the traders who were trying to go long and pick a bottom. And that doesn't work with what we teach. We always teach to listen to the market. And what was the market telling us on this 5-minute time frame? That as early as the first hour, we're going lower. So look for short setups, not buy setups, okay? All right, so that's step number 1. See how powerful that is? All right, let's apply step number 2. If we know what side of the market or what side of the 50-period moving average we're on, we want to look for a bar that closes either in the top or bottom 25% of its range. I know a lot of you don't know what that means, so just take it very simple. I'm showing you this generic bar. It absolutely makes no difference if this were a tick bar, a weekly bar, a monthly bar, a yearly bar, or a daily bar. It makes no difference because all we want to do is find out, divide by 4 separate equal parts and find out if it closed in the top 25%. If it closed in the top quarter of its range and it's above the 50-period moving average, it is an indication to buy. Remember, it's not coming from some guy in a chat room or some guy on TV or some convoluted indicator. This is a great edge coming from the market itself. What a tremendous edge, what a tremendous clue coming from the very thing you're trading. It's telling you that most likely it's going to continue in that direction, okay? Now, a lot of traders say, well, Steve, I don't trade open, high, low, close bars. I trade candlesticks. How does it work with that? It's the exact same thing, okay? You just take the very high of the wick and the bottom, you divide by 4, and if you close in the top 25%, it's the exact same scenario. There's no difference just because you're trading candlesticks. Nothing changes. Or if you're trading a range bar, nothing changes. Now, conversely, if we're looking at a bar that closes like this, well, this closes in the bottom 25%. You simply divide by 4. If you close in that bottom quarter and you are below the 50-period moving average, this is a tremendous edge coming from the market, a clue that the market is telling you it wants to continue lower. Okay, you can start looking at this right now. Look at a few charts where the bars either close in the top 25% and they're above their 50 or the bottom 25. You'll see how they continue to go in that direction. What a great clue. Okay, we don't have to worry about going to a chat room and listening what these guys tell us. Remember, 99% of the time, no one knows any more than anyone else, so why not just listen to the source? The source is the market, and the market usually tells you what it wants to do in advance. Same thing will work if we look at candlesticks, all right? There's absolutely no difference. You just take the very top of the wick to the bottom of the wick, divide by 4, and if you close in the bottom 25%, well, that's an indication to sell. So no difference if we're trading any type of bar, okay? So let me show you how this works, okay? Here's a chart in UPS, an older chart here. As we can see, we're kind of going up, then lower. It doesn't really look like we have any direction. In fact, we've sold off quite a bit, so we don't really know what's going on here. A lot of gap ups, a lot of gap downs. Well, we have 2 bars here that close in the top 25% of the range. Well, that's a good clue right there. But at the same time, we have to be above the 50-period moving average. So we add the 50, And as you can see, they both closed above the 50. Now this is a more aggressive, more advanced close because it opened below and for the majority of the bar was below, but we still closed above. This is a more ideal and conservative bar right here. Either one is telling you that the market wants to go higher. So this is a great clue coming from the market. We don't have to listen to news, earnings, jobless claims reports, things like that. I stopped listening to those things roughly 40 years ago. We just have to listen to the market, and look what happened to the stock, okay? That's pretty much all you need to know. Now, the funny thing about this is I've just given you two of the most basic rules to one of our most consistent strategies. That's strategy number 4. It's a great strategy. I use this in some capacity on a daily basis. Let me just give you some of the highlights of this. It's basically for any level of trader, from beginners to advanced. Everyone who becomes a member of the strategy number 4 course gets the same basic rules, okay? It doesn't matter if you're a hedge fund trader, which we have many hedge fund traders who trade strategy 4, or if you're a beginner, if you started trading just a couple of weeks ago. Everyone starts off with the same basic rules, and then we give you my experience and insight, things that I've accumulated in 40 years, to adjust it to meet your needs, okay? It was designed for traders looking to catch quick momentum moves, because when I first started trading it on the floor roughly 40 years ago, we would use this and maybe exit the trade in about 5 minutes. But we've seen how we can apply this, and you can stay in the trade much longer. We show you how to do that in the course. Now, its intensity level, if 1 was the most intense of all strategies where you basically could not leave your computer, and 3 was the least intense where you could just enter an order and walk away, it's a very moderate number 2 intensity level. It only uses 1 indicator. And guess what? I've already given that to you. It's the 50-period moving average. It's a pattern recognition strategy. The beauty of this strategy is that it works in any time frame, in any direction, and in any market. So if you trade multiple markets, such as the currency pairs or stocks or futures or commodities, it can apply to all of them. Now, as an educational tool only, our members in the course receive automatic buy and sell indications. But remember, as an educational tool, we don't want to get you stuck and fixed as a crutch just to look at the up and down arrows. We want you to use those to just check your work to see if you're in line. Now, as I said earlier, I'm not going to sit here and tell you that everything works 100% of the time. If I did, I would hope you'd run from this presentation, because nothing works 100% of the time. That's just like saying every person who comes up to home plate hits a home run or gets a hit. Even the best of athletes don't score or don't make a basket or don't get a base hit every time. Same thing with any endeavor. Any athlete, any entertainer, any politician. It just is not natural. So the same thing with trading, all right? The beauty is that you want to be able to trade something that has a 2 steps forward, 1 step back approach, meaning that when you do have small losses from time to time, you're able to recoup them rather quickly. Well, that's what we've seen with strategy number 4. It's probably our most consistent strategy to date. In fact, let me share with you some more strategy number 4 examples, which will incorporate the 2 steps that I already taught you already. It has one more rule, which I'm sorry, I cannot divulge at this time because it wouldn't be fair to the Strategy 4 course members who paid good money for the strategy, and then in a free webinar, I was giving away all the rules for free. But let me share with you some examples that use 2 of the 3 setup examples. Remember, we started out the presentation by showing you BDX? Well, as you can see here, it generated a buy signal. But how did we do that? Well, first of all, we're above the 50-period moving average. The bar closed in the top 25% of its range, and it met the last and final rule of strategy number 4 setup. So it's no wonder why the stock gained 20 points, because all the rules were met in 2 months. And remember, we're not a system-based company. We don't tell you how to trade each and every time. So it's up to you. If you wanted to take a 1-point profit, that's fine. If you wanted to take a 20-point gain, that's fine. We teach you ways in the course on how to do that. Remember, our whole goal is to put the power back in your hands so that you don't have to listen to anyone or anything else. So that basically you can take this information and have the knowledge to trade on your own. MSI, looking at this, someone would say, well, Steve, there's no trend here. We're just going sideways for the past month. But actually, we are above the 50-period moving average. We close in the top 25%. And the strategy generated a buy signal because the last rule was met. And as you can see, look what happened. The stock went up. In fact, it gapped up very strongly. Now, off that gap, there must have been some news that generated that strong upward gap, but we had no idea what that was. No one called us up and told us it was going to gap up higher. The only thing we listened to is the market, the chart in front of us. If we look at ADSK, someone looking at this would say, well, Steve, this meets all the rules for an uptrend, the way I've been taught. We're making higher highs, we're making lower highs, or lower, I should say higher lows. Excuse me, I get a little confused there. Higher highs and higher lows. And we kind of have this kind of stair-step approach. So I think this is probably some type of a buy because we're in an uptrend, right? And you always say to trade with the trend. But at specialist trading, the way we decide the trend, the overall trend, is by simply applying the 50-period moving average. And we ask ourselves, where is price in relation to the 50? Price is below. So that's telling us, the market is telling us the overall trend is not up, the overall trend is down. So therefore, we're not going to be a buyer. Remember, we never buy below the 50. So this means no matter what someone says in a trading room, we should be looking for sell setups. Now, strategy number 4 found a bar that closed in the bottom 25% and met all of the rules. So a sell signal was generated. And then in the next week, the stock quickly fell 4 or 5 points. Once again, it pays to listen to the market. It's just that most of us have never been trained on how to do that. I know I wasn't. I was trained on listening to the news, looking at volume, looking at support and resistance, all the things that, conventional wisdom says work. But, excuse me, since most of us are taught all of these things, then why aren't most of us, 80% winners? It's the opposite. It's because there's no consistency in those methods, okay? Now, if we look at this chart in Netflix, this was just a couple of weeks ago. As we can see, we're going lower, then higher, then lower. And so someone would say, well, it's hard to tell. It looks like we're headed lower. We made a high, and then we're falling out of bed. But we added the 50-period moving average. We see that price is above. That bar at the last bar closed in the top quarter of its range. And strategy number 4 generated a buy signal. So this was on the 13th. This was just last week, actually. And look what happened to the stock. Once again, huge gap up in the stock. Did the CEO of Netflix call me up and tell me, hey, Steve, you may want to tell your members around the world to buy us because we're going to have a huge announcement coming out? Absolutely not. We took all our information from the chart in front of us. That's the only thing we look at. Now, once again, nothing works 100% of the time. I've shown you some great examples, but I'm going to also show you examples where it doesn't work. Because as we see here in this older example of Tesla, we are below the 50 period, so we're not going to buy it, right? And we have a bar that closes in the bottom 25%. So this is a valid sell signal that was generated by the strategy and the add-on. And look what happened. It would have resulted in a small loss. And this will happen from time to time. As we see here in this example of Urban, this older example, a valid buy signal was generated. And look what happened. The stock goes much lower. Let's say at this time, you're probably saying to yourself, well, boy, I've got 2 losses. Nothing works here. And now a sell signal is generated. I'm not going to take this one because I can't afford to take another loss. And then look what happens. This one works perfectly, right? Does that look familiar to anyone? Or once again, you see a perfect buy sample, and then you say to yourself, well, okay, I'll go long this one. It looks like we've pulled back, enough. If I buy here, we're probably going to make the old high. So look what happens. It turns into a loss. So once again, even though strategy number 4 has a very high level of consistency, oftentimes you will hit these small losses, these small drawdowns. So we have to ask ourselves, how can we increase our odds for success? Is there a way to increase our odds even more by adding a filter? Well, yes, there is. We add the PET-D. I'm sure if you've attended my presentations before, you've heard me speak about the PET-D. This is one of my favorite tools because it works so well in helping me discern what the short-term trend is. But for those of you who have never heard of the PET-D, you're asking yourself, what is it? Well, it's a proprietary algorithm I was introduced to on the floor. But when I was introduced to it over 30 years ago, it was something we had to calculate by hand. Now we've been able to fix it and make sure that it's done automatically by making it a color bar tool. So there's nothing you have to calculate. There's no formula you have to come up with. It's a proprietary algorithm that simply colors the bars either green or red. And it's a short-term trend identifier. So now we know the overall trend with the 50-period moving average, but the PET-D tells us the short-term trend. So now we can have both in sync together. Let me show you what I mean here. If you have a series of green bars, well, you now know that the short-term trend is up. Conversely, a series of red bars, the PET-D is telling you the short-term trend is down. Now, if we look at this chart in Apple, all right, now someone could say, well, sure, Steve, it's easy to see in hindsight that we're in an uptrend. And, but looking at this, I probably wouldn't buy until somewhere around here because I didn't know until we broke out of this high that we're going higher. So maybe I'd get long about here. And this is the way most traders trade, usually coming in a little bit too late, and they have this false sense of security. For the next couple of weeks, it does very well, and then all of a sudden it falls out of bed, and then you're left with a small loss, and you're thinking, boy, what happened to the trend? So what if there were a filter that could tell us in advance when a trend is about to begin and when a trend is about to end? Well, this is the beauty of the PET-D, because all you have to do is add the color bar tool, and once we do, we see here that the colors turn either green or red. And we didn't have to wait until we broke out of this short-term high to know that we were in an uptrend. We knew as far back as here, 3 green bars, that were going higher. And we also didn't have to wait till this gap down to have a loss on our hands. We knew as well back as here, 3 red bars, that the trend had changed. So you see how powerful this tool is for trading in the short term. You can apply this also to weekly bars. Here's a weekly bar of IWM. That's the ETF for the Russell index. Once we apply, we see how the bars change and tell us what the trend is. We can apply it to intraday trading. Here's a 10-minute bar of the E-mini futures. You can see while we are going higher, you can apply any buy strategy. It doesn't have to be strategy 4, it can be anything. And once we change, you simply switch to the other side. You can also apply it to monthly bars. Here's a monthly bar of the British pound. Okay, this is going all the way back to 2014. We knew well in advance, well before Brexit, well before anything happened, that on a monthly time frame, you should be out, or you should be shorting the British pound. So these are the 3 main ways to use it, but we also found that there's also another way to use it, which is just as powerful, and that's to use the PET-D as a signal confirmation tool. So what we're doing is we're basically taking a signal from strategy number 4, and then we're confirming it with the PET-D. When we add these two together, when we put these 2 very highly consistent methods together, we create this synergy, which by combining the PET-D with strategy number 4, we have created what we call our dynamic duo. Because it's so powerful, this synergy, we have created now a filter which will keep us out of a lot of those losing trades and make sure we're only trading the valid signals. All right, let me show you what we mean here. Here's the way we apply it. If strategy 4 generates a buy signal, then the PET-D must color it green. Remember, green means you're in a short-term uptrend. And all we need is for that one bar, that bar that closes in the top 25%, to be colored green. Now conversely, if strategy number 4 generates a sell signal, well, the PET-D must color that one bar, the bar that closes in the bottom 25%, it must color it red. That's how simple it is. So now let's look back at that example in Tesla. Remember, we have a valid sell signal here, but it didn't work out well. Well, if we had simply applied the PET-D, what do we find? The bar was green. So this was telling us that we should have never taken this signal in the first place. So therefore, no trade and no loss. How about urban? All right, now we had a buy signal followed by a sell. Now the buy signal obviously didn't work out. But if we had applied the PET-D, we see that this was colored red. Remember, we can only take a buy signal if it's colored green. So we would not have taken this, not have suffered a loss. And then once the sell signal was generated, we see that, well, it was colored red, and that was giving us the go to take it, and look what happened, okay? See how easy this is to apply without really having to analyze, going to, a signal service. It's all right there, done for you. CVX, remember this turned into a major loss. But if we had simply applied the PET-D, we see that, well, it was colored red all along. We never would have taken this trade. All right, so let's look at some more current dynamic duo examples just to show you how powerful and how simple it is to apply this process. JEC is above the 50 period. A valid buy signal was generated, but if you want a little bit more confidence in taking this, just add the pet D. And even though the majority of the bars are green, all we need is for this one setup bar to be colored green, and the stock generated 6 points in the next week. PRGO, all right, this is an example to show you how this works on more expensive stocks. Now, I know a lot of people could not short a stock like this. You have a larger account size or just don't like to short stock, so you could easily have applied options, puts to this scenario. We have a lot of traders who don't even trade stocks, but they use our strategies for trading options. So as you can see, we are below the 50. A sell signal was generated, and not much happened here. And then another sell signal was generated. So you're thinking, well, we really didn't go down that much. Am I sure this is really going to be a good trade? Well, if you applied the pet D, you see that both of these sell signals were generated red. So it was a confirmation by the pet D. And if you just hung in there, well, that would have been 40 points in the next 3 weeks in your favor. Now remember the example I showed at the very beginning of this presentation. Well, that was also confirmed by the pet D. So that's one of the reasons why we felt confident to take this for all of our members and to gain roughly 20 points in the next 2 months, because it was a valid strategy 4 that was confirmed by the pet D. Now, some of the best trades I always tell my students are the ones you never take, because as we see here in this example of HRB, now even though this is a little bit more advanced because once again we're just barely popping above the 50 period moving average, it is a valid buy signal. Now, a lot of our students will say, well, Steve, gosh, we're jumping above, below. I'm not sure if I feel confident about taking this trade. Well, that's where the pet D comes in handy, because all you have to do is simply apply it. Remember, a buy signal needs to be colored green. And as you can see here, this was colored red, so you never would have taken this trade, and it would have been a good idea not to, as you can see what happened to the stock. And the beauty is that once the trend kicks in even more powerfully, well, strategy 4 will generate some powerful signals in that direction, and they will be confirmed by the pet D. So the beauty of this is you would not have taken the buy setup and most likely would have taken the sells. Now here's an example in letter K. Once again, this stock looks like it's going nowhere. It's just basically going sideways. But according to the first step I taught you today, we are above the 50 period moving average. So even though it appears to be going sideways for the past month, the overall trend is still up. And we have a bar that closed in the top 25%. Now the last requirement of the strategy was met. So strategy number 4, add-on, the software generated a buy setup. But if you were a little gun shy and thought, well, this is my first trade, I'm not really sure, you could have easily added the pet D for more confidence. And once you did, you would have seen that that bar was colored green. Remember, all we need is for that bar to be colored green. Even though the bar prior to it was red, it makes no difference. And as you can see, the stock gained 10 points in the next 2 weeks. Once again, if you happen to miss that and there's a powerful trend underway, strategy 4 will most likely generate more buy signals as it did here. So you would not have missed the second signal. Now here's an example here. It's a little bit more aggressive, but just to show you how a lot of our aggressive traders, our more advanced traders, like to trade signals such as this. As you can see, this was in CI just about 2 or 3 weeks ago. We're trading below, then above, then below, then above. Someone once again would say, well, boy, even though a sell signal was generated, we closed in the bottom 25% and we just barely closed below the 50. I'm not sure I want to take this. Well, what's the solution? In order to get that added confidence, that added consistency, you add the pet D. And in order to take this trade, the pet D needs to color that last bar red. So we add the pet D, and lo and behold, it's red. So this would have given you the confidence to take this short. Remember, you don't have to actually short the stock. You could have purchased puts or used some type of applicable strategy where you, option strategy where you're going short the stock. And it fell 13 points in the next 2 weeks. See how simple that is. Now this doesn't only work on stocks. Here's a chart in crude oil. All right, here's the daily chart in crude oil going back about a month. Once again, a buy signal was generated. We add the pet D and see that that bar was colored green, and Crude went up 4 basis points in the next week. We can also use it for ETFs. Here's the QQQs, an older chart, how we have 3 buy signals as it was going up, and once the trend changed and we went below the 50 period, a sell signal was generated. Now, even if you don't trade the QQQs, you could have used this as a market timing tool. So if you're interested in a stock that's in the NASDAQ, you could have simply used this to generate a buy signal in your stock to know that you're in sync with the overall market. Now I want to show you this chart. This is roughly about a year ago, a little over a year ago. This is a daily chart of the E-mini futures. I know a lot of people don't trade the futures, but I just want to show you that, as I said earlier in the presentation, so many traders love to play the victim game because they love to say, well, if they're a victim, then that gives them an out. If they listen to someone or something else, or if they believe that something is more powerful than them in the decision-making process, then they always have an out. They can play the victim game and blame it on them why they're losing. And as I always state, that goes out the door for all of our members at Specialist Trading, because you're given all the tools that have a high level of consistency in getting you in sync with the market. Since you're not listening to outside sources anymore, you're only listening to the market, you automatically put the odds in your favor because you're listening to the source. And the source will tell you most of the time what it wants to do in advance. Now, if we look at this chart, you can see that we're oscillating below and above and below the 50-period moving average. Now, as we look here in mid to end of August, a sell signal is generated. Now, this is a little bit more advanced sell signal because, we are looking at daily bars of the E-mini future, which take a lot of capital to trade. But there are many of our traders who do trade this way. We have hedge fund traders who trade daily bars of the E-mini futures. And had you looked at this, you said, well, I'm not really sure I should be going short. Well, all you have to do is apply the PET-D. And even though we're oscillating above and below the 50, that bar was colored red. So we knew well in advance of anything that happened that took place, because basically the market was just going sideways. We knew that we were going to be shorting the market. And look what happened. This is what happened last year when the market was down intraday at one point over 1,000 points, okay? And this was the E-mini future. So we knew a full 3 days in advance that the market was going lower. Why? Because of the consistency in strategy number 4 combined with the consistency in the PET-D. So when you combine those two together, you get this powerful synergy we call the dynamic duo. Now, once again, we know that not everyone trades daily bars of the E-mini, so let's look at a 10-minute chart. Here's a 10-minute chart going back to last week. Excuse me. This was just last Tuesday, I believe. Now, on a 10-minute time frame, here's the opening bar of the day, first 10-minute bar. Okay, now the strategy generated a sell signal. We're below the 50-period moving average on a 10-minute time frame, and we closed in the bottom 25% of its range. Now, these are the same rules we use for daily bars, the same rules for weekly bars. Nothing changes because we change the time frame. Nothing changes because we're looking at a different market. All right? So this was a sell signal. But let's say you were a little gun shy. So in order to get that added confidence, you add the PET-D, and it's colored red. So this would have given you the confidence to go short just last week, the very opening bar of the day, and the E-mini dropped 25 points by the first 3 or 4 hours of the day. That's roughly over $1,200 per contract. And we're not saying you would have held out for 25 points, but that's how much you had to work with. And the PET-D was red the entire time, giving you the confidence to stay short if you like. Now here's another 10-minute chart. This is going back to June. I'm especially showing this because this was during the Brexit scenario. Remember when that happened and the markets fell out of bed? Well, here's a 10-minute chart of the E-mini in June, on June 24th, when all that information came out. And a lot of people were saying, well, how can I short, Steve? We gapped down so much and we're already so much lower. Well, a sell signal was generated on this 10-minute chart in the first hour. All you had to do was apply the PET-D and see that, well, it was verified and it was, giving you the confirmation to take it. And if you were lucky enough to hold a position overnight, well, that would have generated in another sell signal and 70 points in 24 hours. That's $3,500 per contract if you had stayed in overnight. Now, this can also be applied to the currency pairs. Here's a sell signal in the Swiss franc. This was generated just a little while ago, as we can see. It is confirmed by the ATTENDEE. So had you taken that, well, that's 200 pips to the downside in 1 week, roughly $2,000 per contract you had to trade with. And we can also use this intraday. Here's the British pound on a 50-minute time frame. If you had taken, any one of these setups, so that's roughly 500 to 600 pips in your favor in just a matter of moments. That's roughly about $500 to $600. And we can also apply it to a weekly time frame. Here's the British pound once again. We're looking at roughly August of 2015, a little over a year ago, on a weekly time frame. A sell signal was generated. If we add the ATTENDEE, it's confirming a valid sell signal along with the confirmation. And look what happened, okay? Now, this is all, a year in advance of Brexit. And by the way, that's when Brexit came out. So we knew well in advance, by being below the 50-period moving average and by getting a sell signal and by the ATTENDEE confirming it, to stay short the British pound. Before that vote even took place, we knew we were short. Then lastly, we can look at an even higher time frame. Let's look at the monthly time frame, the Canadian dollar. Buy signal was generated. It's above the 50-period moving average, closed in the top 25%, the 2 steps I taught you at the beginning, and it's confirmed by the ATTENDEE. 3,500 pips coming into 2016, okay? $35,000 roughly if you'd stayed up the whole time. So do you see the value of this? By simply not listening to traditional wisdom, by saying, well, we've got to find out what the institutions are doing, or Steve, I've always been taught that volume is so important, or support and resistance is really where it's at. Trust me, I was taught those same things 40 years ago. They didn't work for me. For 2 years, I struggled tremendously using those things. My mentors saw how much I was struggling, and they said, Steve, listen, we've been trading for 35, 40 years ourselves. We never look at that stuff. So why should you? Okay? So it took a while for me to really grasp this because I couldn't believe it would work. But finally, when I did, well, that's when my trading started to turn around. And that's what I believe has sustained me for nearly 40 years. So this is the same thing I apply in my personal trading and what I teach all of my students. The same thing I teach you here is the same thing I use on a daily basis. So let's recap. We shared with you 2 of the rules to one of our most consistent strategies. Strategy number 4. Remember, first step is always ask yourself, where is price in relation to the 50-period moving average? If price is above, you're only going to look for buy setups. If price is below, you only look for sell setups. The step number 2 was you look for bars that either close in the top 25% or bottom 25% of their range. These are 2 very simple but powerful steps that I really strongly believe will increase your odds for success because they have done so for mine. And in fact, they're so powerful, they are 2 of the 3 basic setup rules for one of our most consistent strategies, strategy number 4. Now, when you combine that with our short-term trend identifier, the ATTENDEE, you get what we call the dynamic duo because it creates this synergy for success. It's that powerful. And I use this on a daily basis. I don't trade anything unless it's confirmed by the ATTENDEE. So ask yourself, as we go towards the end of this presentation, do you think any of these edges I shared with you today in this educational presentation could have helped your trading this past year? In fact, go back and look at your last 10, 20 trades. I can almost assure you that the reason why you had losses was because you were buying below the 50 period and selling above. Now, you see how simple those first 2 steps were that I shared with you. Don't you think that the other things I share with you can be just as valuable? Now here's what we'd like to offer you today. Here's our special attendee discount for all the attendees in our webinar today. We're going to offer you our dynamic duo, but this is a 1-day special, all right? This is strategy number 4 along with the ATTENDEE. You get instant course access, detailed instruction, 20 videos roughly. I teach you all the standard basic entries, exits, and stops. This comes with the ATTENDEE as well. You're going to get all the ATTENDEE trading techniques, includes four ATTENDEE trading techniques, and the add-on. So you can automatically get the buy and sell arrows for strategy number 4 and automatically change the colors of your bars from green to red. Now, one of the things we don't talk about, which is included, is another educational service. But I stress educational because we don't want to turn into a signal service. But while you're beginning, for a limited time only, we also offer signal alerts, such as this. Now, this was an email alert we gave to all of our beginning students on the 27th, just almost a month ago in September. as you can see here, circled in green, there was a strategy number 4 buy signal generated in Qualcomm. As you can see, it's a buy signal generated on the night of the 27th for entry on the 28th. Now, here's the standard chart. We're above the 50. We close in the top 25%, the 2 rules I shared with you. And it's a valid strategy number 4 buy signal on the close of the 27th. So if you checked your work on the 27th, you would have seen that, yes, that was a valid buy signal. If you had the dynamic duo, you would have seen that it was validated and it was confirmed to go long. So you could have gone long either at the close of that day or the very next day, and the dynamic duo generated 7 points in 3 days. This was an actual signal generated and confirmed by the dynamic duo. This is what you also get within the course. Now, I know a lot of you like to trade intraday. Remember, you can still apply this intraday. Here's a 15-minute chart of the E-mini. A little while ago, a sell signal was generated on this. We're below the 50. We close at the very bottom of the 15-minute bar, and it's confirmed. As you can see, the dynamic duo generated 12 points in 2 hours. That's $600 per contract if you decided to stay in. Okay? So it doesn't matter if you're an intraday trader. It doesn't matter if you trade stocks, currency pairs, futures, commodities. The dynamic duo will work in all these markets, in all these directions, and in all these time frames. Now, because of how much profit potential there is in our dynamic duo, you see that it doesn't come cheaply. Lifetime access to this, to the PET-D as well as the dynamic duo, is roughly $29.95. But what we're offering today is really discounted. We're going to give you this one day only for a small lump sum of $497 down and then just simply $97 per month. That's it. You get access to both Strategy 4 and the PET-D. Comes with the signal alerts, and I think most importantly, you're also getting 40 years of experience as your personal mentor. You can contact me, we can correspond whenever you'd like through email, and I will get back to you as soon as possible to answer any question that you may have. And I'll be there with you every step of the way so that you can be trading with confidence, okay? So here's how to take advantage of this one day only special of $497 down and $97 per month. Contact my sister site, Pro Trader Strategies. They have trading consultants manning the phones right now, so you can call them up if you'd like to discuss any more information, or you can email them at trading@protradingstrategies.com or call them directly at area code 310-598-6677. Now, that link you see at the very bottom is the link that will take you to the sign-up page to get this special one-day deal. But it's not a live link, so if you look to the far right-hand corner in the chat box, you'll see they have posted a live link in the chat box. So you can simply click that on. It takes you to this one-day special of $497 plus $97 per month, and you will get that. Remember, after this, it goes back up to $29.95. So contact Pro Trader Strategies. Probably if you have any more questions about this special deal, you can call them up at 310-598-6677. I'm going to leave this information up so that you can take advantage of it for this one day while I open up the question and answer box. We have about 10 or 15 minutes left, and I want to thank you for holding off on any questions. Let's see, I can't stay for the end. Can I get this information later? Yes. Remember, if you want to look at the video of this, contact Pro Trader Strategies. They will send you a link to this. But remember, you have to take advantage of this. You only have 24 hours to take advantage of this one-day offer. Because we normally offer this for close to $3,000, and this is a fantastic deal. Now, I know a lot of you are asking, well, what platforms can I apply this to? Will it work on me? Let me give you this list of platforms here so that you feel comfortable with it, and we'll be able to go through this list right away. It works on TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim. So if you have any of these platforms, you can apply this dynamic duo with the up and down arrows as well as the PET-D. The only thing that will change a little bit is Thinkorswim. Because of the way they're set up, they don't allow us to actually use their platform. So they've allowed us to splice their data, and we just apply it to a free NinjaTrader platform. We give you that free platform. We set it up for you. We have a great tech support department which sets up the entire thing for you. So this is a great Great offer, great tech support. If you're having trouble applying these add-ons for the Pet D or anything, you can simply contact our tech support and we'll do it all for you, okay? Remember, I use these techniques on a daily basis. If many of you are struggling, or if you started out the year in 2016 with all these hopes and dreams and you're at the end of your rope now, here is your last chance to get on board before 2017 starts. We've only got a couple of months left before the new year begins, and you don't want to start off using the same old inconsistent techniques we've been all taught. I know, I've been there. I traded nearly 2 years using them, and I had a terrible time. I didn't think I was actually going to be on the floor much longer. These are the things, these exact techniques that saved me and have sustained me for nearly 40 years. Starting next year, I will be in the business 40 years using these same techniques. So if you're interested in turning your trading around, of becoming a consistent trader, now's the time to take advantage of this before it goes back to this nearly $3,000. Remember, this is only for 24 hours, so take advantage of this while you can. The best thing, if you have any more questions, would be to contact Pro Trader Strategies. No obligation. They would answer anything. They'd be happy to answer any question that you may have, okay? All right, as we close here, I want to say thank you so much. I hope you got something out of this. I hope these 2 steps will help your trading. And I look forward to all of you becoming students of mine at Specialist Trading, but most especially becoming members of my Dynamic Duo course. Thank you so much. I will see you next time. Bye-bye.